Welcome to this exclusive webinar of Trading View charts with ICICIdirect. Today we will be covering about how to use Trading View charts on ICICIdirect platform. Mr. Dharmesh Shah from research department. He is an expert in the technical charts, and he'll be showing us the walkthrough of how to use the indicators and the tools that are available on the Trading View charts. Dharmesh sir, over to you.
Yeah. Thank you, Sumit, and good morning, all, and welcome to this webinar on Trading View. Yeah, as we all know that the Indian market has been highly volatile right now, and such volatility always creates a great opportunity to make money if one is on the right track. And I think so the returns which the stock market, Indian capital market gives, I think so it's much larger than any other investment tools, source of investment. So, however, the dark side is that one can suffer heavy losses if one is on the wrong foot. But most of the people looks for making fast money and on the losing side. We believe, I think so, two things which overcomes the human mind is one is the fear and greed. And people just don't book the profit on the greediness and wait for higher profits. And at the same time, they book losses on the back of fear of losing heavily. And to overcome this two things of greed and fear, I think so technical analysis is one which helps us to overcome this human behavior. So what is technical analysis? Technical analysis is a science which predicts the future price based on the historical trends, historical prices. We believe, I think so, in today's sessions, we will be learning of how the indicators should one using it and how that can be implemented in a day-to-day daily activities as well as in a investment as well as a trading opportunity. Now, as we all know that the market has been very volatile and such volatilities creates a great of opportunity. But one also need to see how one should play in such a volatile market. So coming to the straight to the watch list, I think so. First of all, you need to go to the watch list and where you can list the securities of your portfolio. If you want your favorite scripts to be get added, you can put there and you can look at individual charts. Post that there is again options of zoom in and zoom out for your chart. One can look for period, can decide the period whether you want to go for daily chart, weekly chart, or something like that. Or where you can look for intraday for 15 minutes, 10 minutes, 5 minutes. So this is how the time frame is decided. For that, again, if I want to look for last 10 years history, I can zoom in and zoom out the charts based on that, where one can again look for longer term history for the market. To again part of this again to check all the things, how the things behaves the history. I think so. If we go back to the current market price on the chart, I think so the right hand side the live price is also visible on intraday. Go back, just take a clicker on the green where you can see current market price of Nifty going on right now. Apart from that, again, coming to charts again, to zoom in and click it, I think so. Zoom in and zoom out is a very simple. To clear the history, I think so, and to go for the next chart, one can just click on the second chart like Asian Paint. If one wants to go for Asian Paint, just click and you will get the new chart. The chart. Apart from that, again, I would say the chart history was one wanted to see. I think so. The right hand side and the left hand side. Or suppose if I want to go for 3 months, I think so. Go to the monthly charts and one can look at the bigger time frame of the picture on the chart. So this is how the one can use the chart patterns based on the time frame. I think so. For traders, I think so. Weekly is very important, and for one who is looking for bigger picture, can look for monthly charts. Apart from that, now coming to the tools, I think so. One can use out for in the day-to-day activity. Go to the tools again, Sumit, and look for measures. I think so. The one measures is the one where again measure is something used to measure the magnitude of the move in terms of absolute point percentage, in terms of number of bars. If you go to see that, you will come to know if you select how much percent the stock has moved with number of bars and number of days is already visible on the chart. Apart from that, channels, I think so. The one I think so. Uh, Best way to look out for whether the stock is inside the channels or not, is been trading in the channels or not. So again, I would say that the channels, I think so, the one which provides the trader with a potential point from entering and exiting the trades, as well as controlling the risk. To draw a channel downward, select the subsequent peaks and troughs. I think so. One can see the upper band of the channel shows the resistance, and the lower band of this channel shows the support. So whenever the stock hits the upper end of the channel, I think so that is a resistance where one can look for booking profits, either from the intraday or from the medium daily perspective, and also from the lower end of the channel. If you look at the support from where the stock has seen the support and where the green candle was visible, and we have seen the upward momentum in the price. So channels generally is important to draw, where you should look for important tops and important bottoms. I think so. Joining those, I think so, can give you the fantastic results in channels. Apart from that, one can also draw the trend line. I think so, the one which we all know, the which we talk of a lot, technicals, and let us tell that trend lines, I think so, the one is very important to understand the support and the resistance. Again, trend line is where, if you look at the current trend line which it has drawn, clearly shows the buying support at the lower end of the channel whenever the stock hits those channels. Apart from that, again, the higher side channel, if you go back, it's showing the resistance, and where we have seen after hitting the upper band of the channel of the trend line, we have seen a sharp sell off in the stock. So this is how the trend line works. So most important part of the trend line is that so is something that important highs and lows are identify, and trend line should be at the 45-degree. It should not be too steep or flat at one point of time. So for two things to come out with the trend line, I think so. One is that it should mark the important highs and lows. Apart from that, it should be in the 45-degree. It should not be too steep or too flat to give you the wrong results. So trend line is one which is again important. Now coming to again next is Fibonacci retracements. Yeah, Sumit, can you go to Fibonacci retracement? I think so. Fibonacci retracement, let me tell you that the Fibonacci retracement is something which gives you that whenever there is a sharp move in any stocks or any prices, we always see the moves are getting retraced, and that is nothing but the correction which gets retraced in the channel. So if one have to look for the bigger picture for the market, suppose the market is moving for continuous 5 days, we always see some bit of a profit booking happening in the stock or in the Nifty. So what does this Fibonacci tells you? We technicals, we give importance to 38%, 50%, and 61.8% retracement. Apart from that, I would also like to add 78.8% retracement also. This is also equally important to look out for. So what does this retracement tells us? Now this retracement again tells us the possibility of where the stock should take a support, I would say, inside that Fibonacci retracement. So 38% is something where is a normal minimum corrections where stock can see a correction. If you look in the current picture, I think so it shows clearly, I think so, the 38% retracement. When in the normal market, I would say, whenever it's a bullish market, generally it has been observed that stock won't correct more than 50% if the stock is in a bull trend. In at the same time, on the falling market, it generally gets retraced max to max by 61%. So six on the fall which it gets correct the rise. So Fibonacci retracement is something important to look out for. If one is a trader, I think so, and the stock has moved for continuous 5 days, one can go and take the retracement of those stock particular and see where the stock has seen the support. Suppose the stock getting stabilized at 38%, and with a strong volume, I think so. That is the first indicator of moving long in those particular stocks. So Fibonacci retracement is something important to look out, and that is the most common tool which been currently used in our day-to-day activity. So three important points to look out for: Fibonacci, 38%, 50%, and 61%. Rest all you can go and delete it out. But yeah, for extension purpose, on the higher side, if the stock is making a 50 week high every day, to take that, I definitely require the extension this is how the Fibonacci retracement works out, and it is important to see. I think so in such a market, such a current volatile market. If you look at the market on the Nifty, the movement which happened from 7,500 for Nifty to uh, almost 18,600. You can take the Fibonacci retracement, how much the stock can correct. Sumit, take a retracement of a from, yeah. So this is how the Fibonacci retracement works out. Currently, if you look at the last move, which moved from 13,596 to something around 18,600, we exactly placed at 61.8% retracement, which was around 15,600. So 15,400, 450, 500. So this is how we come out with the supports, that how the supports are worked during that Fibonacci times. Just want to add one more thing in trend line. Whenever the trend lines are breached, trend lines, yeah. So whenever the trend lines are breached, suppose just an example, go to the chart,
Hmm.
trend line, trend. Just go to trend lines. Yeah, draw on any trend. Which, can you go to Asian Paint chart? Go to the daily chart of Asian. Delete it off. Draw the trend on the bottom. Yeah. So whenever we see a breach of trend line, whenever the stock has breached the trend line, it is a first indicator of a reversal. It is a first indicator of a reversal. So whenever, if you look at the chart of Asian Paint, once it breached this trend line, I think we have seen a sharp cut in Asian Paint. That is what is important for trend line. Once the channels are broken up, once the trend lines are broken, you have to reverse your trade. And you, once is long on the chart, I think so one should reverse to the shorting side of the stock. So important of the trend line is, again, I would say that two important things, I think so. Important highs and lows, and reversal is an important pattern inside the trend line once it is breached. So support becomes resistance and resistance becomes support, the breach of trend line. Apart from that, again, I would like to say the Fibonacci retracement is quite important in a day-to-day activity, because one, as a trader, definitely have to see if a stock is moved for continuous 5 days. Don't go long. Wait for the retracement for at least 38 to 50%, and then one should take a call on the buy side for particular stock. Apart from that, other is Andrew Pitchfork. Again, I would say the tool which, where you have to mark, it is used three parallel trend lines to identify the possible levels of support and resistance, as well as the potential breakouts and breakdown levels. So here, if you see, it is drawn by placing the points at three consecutive peaks and troughs. The result is an upper band of the trend line and a lower band of the trend line and a median trend line. The bisecting lines between the second and the third point act as a starting point, which the price action should be responding to the support and the resistance level provided by the upper and the lower band, as well as the tendency of the price to revert back to the medium trend line. So if you look in the current scenario, which Smith has drawn, the stock has been finding support at the lower band of the channel. The same time on the higher side, it has been facing the stiff resistance. So it gives you the judgment of upper band, as well the stock is in the overbought or oversold. Once it touches the upper band of the channel, it is quite to be known as overbought. And once it comes to the lower band of the channel, it is to be considered as the sold territory. So this is how the Andrew Pitchfork works out. To clear the drawing, you can clear it by going and deleting. How, just show how to, yeah, you can delete the working of your, you have seen Sumit has done. Now coming to intraday chart, change the time frame. I think so. I would like to suggest you to say of all this that trend lines are again uh, for intraday traders. I would like to highlight one should look 15 minutes chart. I think so. That is giving more better signals compared to 5 minutes and 10 minutes because 5, 1, and 15 minutes can give you the whipsaw signal. But 15 minutes is a chart candle is something which is very much important and it gives a proper signal because of 15 minutes time frame is I think so quite decisive. I think so to take a decision for next half an hour of a call that particular stock. Now coming to charts, there are different types of charts. One is again, I would say a candlestick chart, which is a most popular and most to all of us. Now, candlesticks are the graphical representation of the price movement for a given period of time. If the closing price is above the opening price, then it is a green candle. If the opening price is above the closing price, then it is a red candle. So green candle indicates a strong bullish pattern, and red candle signals a trend seems to be weak or the, that particular day the stock was on the negative side. Second chart is something a bar chart. Now a bar chart is something which shows you the open, high, low, and close for a specified period of time. The vertical line on the price bar chart, the high and the low for the period, and the left and the right horizon on each price bar represent the open and the closing price of that particular day. Third is again a line chart. Line chart is a way of visually representing the stock price history using a single continuous line. A line chart is easy to understand, simple in form, depicting only changes in the stock's closing price over a time. So these are the three types of chart which one can look out for. But preferable will be the candlestick chart. Apart from that, uh, chart preference again, I would say that you can have multiple charts. So you can compare the chart. Suppose if you have a chart like here it is Asian Paint and you want to click with the Berger Paint, for example, you want to see the same company now who is outperforming which company, whether the so you can plot the chart of Berger as well as Asian and can look for is it good at Berger. I'll get back to you on the same after some time. I think there's some technical issue. Apart from that, again, uh, let us move into the studies part again. Now, coming to daily indicators. Yeah, the first one is the average. Now, moving average. Now, moving average is widely used technical indicator that smoothen out the price trend by filtering out the noise from the random short-term price fluctuation. If the price is above the moving average, then the trend is up. If the price is below the moving average, then the trend is down. Now, the moving average is used to identify the trend direction and to determine support and resistance of that particular day. The, now, the 20-day may be the analytical benefit for the short-term trader. One is looking at the short-term trades. A trader should look for 20-day EMA. Let's go back to 20-day. Yeah. And yeah, so the 20-day is something that is follows the price more closely and therefore produce less lag than the longer term chart of 200 day. So trend line moving average can be defined in three ways. Right? So one on the short term side, if one is looking for two short term, look for 20-day EMA. From the medium term perspective, one can look for 50-day moving average. And from the longer term picture, one can look for 100-day as well as 200-day moving average. So this is how the moving average is plot out. Can you go single by 20-day and need to see the support, how the things have worked on daily chart. This is 20-day, right? Yeah. So to look at the green, right? Yeah. So the green is something showing the 20-day moving that whenever if you see there is a support, if the trend is up, it finds support at 20-day moving average and start moving up. Once it crosses, breaks the 20-day moving average, look at the pressure in the stock. So this is clearly visible. If a stock is up on about the 20-day EMA, that is favorable for the traders on the long side. At the same time, cutting the same on the downside is something negative for the stock. So 20, 50 and long-term investor, one is looking out, can look for 200-day. Just got 200-day moving average. Yeah. The 200-day on Nifty daily. Yeah. So we'll see what has happened. Once it's reached the 200-day, we have seen a sharp cut in the market. Go to give the bigger picture of the Nifty for 200-day. Just slowly. Yeah. No. Time frame should be bigger. Take off last 5 years data. Yeah. So it will be easy to understand. Make it a most common. Can we show for some stocks like Asian traders where we can show every any stock? Yeah. So 200-day again has been working fine in all the time frame. So one if looking from a longer term picture horizon, I think so 200-day is something from the investment perspective, I think so 200-day works a lot because if the stock is above the 200-day moving average, it is to be considered as a better stock from the investment perspective. At the same time, if once it breaches the 200-day moving average, I think so it is to be considered that the momentum seems to be losing out, and maybe I think so stock could not be the part of the investment strategy at current trend. So 200-day has its more importance from the longer term time frame. Next is again most popular is Bollinger Band. Wait, can you go with the chart? Yeah. So Bollinger Band, what is Bollinger Band? Bollinger Band helps to determine whether the price is high or low on relative basis. Generally, they are in pairs with both upper end and the lower band and in conjunction with the moving average. Further, how to use the Bollinger Band? When the stock price continuously touch the upper band of the Bollinger Band, the price are considered to be overbought. At the same time, when it touches the lower end of the channel, it is to be considered as oversold. So when Bollinger Band, what are the best time frame one should look out for? Now the question will be, I think, so the time frame. So one can use for Bollinger Band. So it depends upon your trading style and approach. If you are a day trader, then you will use definitely a Bollinger Band with a lower time. And the lower time frame can be in 15 minutes or 5 minutes from the intraday. If you are a swing or a positional trader, then your Bollinger Band should be on the daily as well as on the weekly time. So coming to the Bollinger Band, the measurement that goes to two standard deviation about 95% above and below the 20-day moving average. So this is how the Bollinger Band works out. See, whenever the stock like A, whenever it touches the upper band of the channel, look at the selling pressure it has witnessed. I think so. Most of the time, whenever it has touched the upper band of the channel of the Bollinger Band, it it seems to be the stock is overbought, and of course that we have seen a selling pressure. At the same time, whenever it touches the lower band of the, it hardly had touched the lower band, but recently in Jan 2018, it has touched the lower band of the channel. Yeah, lower band of the channel. Post that we have seen a good recovery in the stock. So this is simple maths. I think so. I would say that whenever the stock touches the upper band of the Bollinger Band, one should consider that as a resistance and should once book the profit and wait for the confirmation for the lower band of the channel. So Bollinger Band, I think so, is one we can use on our daily as well as on our intraday time frame. And let me tell you one more thing, that the Bollinger Bands are the trading tools used to determine, most important is the entry and the exit point for the trade. So the bands are often used to determine whether the stock is overbought or oversold. So thus to one, the most common, I would say, calculation used is the 20-day simple moving average for the middle band. The upper band is taken by the middle band, the adding twice the standard deviation that time. So again, I would last but not the least, Bollinger Band can be used even for the intraday as well as the daily as well as weekly time. Now the next indicator is ADX indicator, advanced line, average directional move index. So can you go there? ADX. Yeah. Now, what is this ADX described to be? I think this is ADX is something average directional movement and can be used to help to measure the understand the overall strength of the trend. When I say overall strength of the trend, ADX is used to quantify the trend of the moving. I would say the ADX calculation are based on the moving average of the price range expansion over a period of time. So ADX is one where if you look, whenever the trend is down, it is moving on the downside, and once it starts curving on the door, if you look at the curve, I think so, that is more important. Once that curve gets flattened and shows the upward trend, that shows the clear trend of the stock. So this is again an important ADX indicator which one can use out for from the daily time frame. But apart from that, again, I would say for moving averages for the short term people, one can look the ADX of 5, 8, and 13 days. Good to say. So yeah, so one can look for 5 and 8 days for the short term. For the long term perspective, medium term perspective, one can look for 8, 13, and 21 days as a ADX indicator. Apart from that, momentum indicators. Again, I would say that the momentum indicators, yeah. Now, momentum indicators identify when the price is moving, whether the price, when the price is moving upward or downward, and how strongly it happens. So when the first version of momentum indicator is a positive number, the price is above the price number of periods, and when it is negative, the price is below the number of period below. So it clearly shows you how the price moves. If one want to see of last 9 days how the things have, so what does that indicate to us? So here it is showing 10, a 10-day actions of the momentum indicators of that particular stock. So momentum indicators, again, I would say something which shows you the whether the momentum is upward or downward for X number of days, whichever you define it out. Apart from that, again, I would say look for the most common is RSI. Again, the RSI is something describes the momentum indicators that measures the magnitude of the recent price movement in order to understand whether the stock is overbought or oversold. So an RSI reading below 30 is considered to be oversold, as well as the RSI at the top of above 70 is considered to be overbought. So this is how the RSI is most, I would say that the RSI is most typically used for 14-day time frame, measured from the scale of 0 to 100. with high and low levels marked at 70 and 30. So RSI provides the signals that investor to buy the security or stock when the stock is oversold and sell when it is overbought. So the important terms to use for understand the for RSI is the something like whether the stock is overbought or oversold, where 30 is considered to be oversold and 70 above 70 is considered to be overbought. Again, the last some other indicators like stochastics, I think so the one which we daily use in a for more important for short-term traders, I would say, as well as for the medium-term perspective. So now for stochastics, yeah. So there are two types of stochastics. One is short and one short stock, fast stochastics, and one is slow stochastic. Now coming to stochastic, again I would say that the one is from the trading perspective. Again, I would say that the stochastic is very much important. It is maybe the too early indicator, I would say, apart from RSI and moving average, which gives you the hint of the market, which side the market is likely to see the momentum. So for stochastics, I would say from the one can look for fast stochastics with a combination of 21 and 34 days, which gives you the much better signal and maybe the much advanced signal, I would say, compared to the shorter time frame. So 21 and 34, I think so the one which is again a fast stochastics and which we feel I think so should gives us the very signals are being very fast, and maybe the I would say that the early they are the early signals, and this may particularly work best for the daily as well as for the weekly time frame. Even for the intraday traders, I think so one can look for 5, 8 and something time frame 13 stock 13-day stochastics, where again I would say from the intraday perspective, the stock is oversold and the stochastic rating is below 10. It is considered as an oversold territory where one can take a position on the long side only from the intraday perspective. Seeing a vice versa is something like if a stock is going up and it moves above the 90-95 level of stochastic reading of 95 of stochastic, it is considered to be the overbought where one can consider for going short from the intraday perspective. Last but not the least is a super trend, which is the most familiar and mostly used for intraday as well as from the daily and weekly perspective. Now, as the name suggests, the super trend, the trend following indicator, just like moving averages and MACD. It is plotted on the price and the placement indicates the current trend. The indicators used to give us the accurate reading about the ongoing trend. So how do you so one is important, I think so. If the stock is above the green line, there are two, the line is there. One is red and the green. So the once the price trade below the red line, I think so it is considered to be the negative. And once it's crosses above the green line, the price is till that time it doesn't reach the green line, it is considered to be the uptrending stock. So it is good for the intraday traders as well as for the positional traders, depending upon your time frame and your time horizon, which way you are going out. Apart from that, sir, I would like to also like to highlight all of you is the volume indicator. So volume is something the most important parameter in technical stock. So a stock moving with a strong volumes, with a strong breakouts, I think so, is considered to be the one of the trends which can sustain for longer time frames. So in our stock, in our daily routine, again, I would say technicals, whether it is a intraday as well as a positional, one should look with importance to the volume parameters also, which is quite important and day to day. So for traders as well as for the medium term perspective, swing traders, volume is something, a strong volume indicates the trend to be sustained for medium term perspective. But if the stock having a less volume and is moving up, I think so that can deteriorate the trend once the trend gets reversal. So volume is an important parameter supported by price is something one can look out for. Apart from that, again, I would like to say something like patterns. I think so one can look out for. There are many types of patterns where one can look for triangle pattern, head and shoulder pattern. So there are many patterns where one can look out for. But for give you example like a stock like Fossil, which has recently witnessed something like head and shoulder pattern, inverted head and shoulder, I would say. Look at the nozzle. It's clearly showing the inverted head and shoulder pattern. So nozzle, look at the shorter time frame again. The stock has been witnessing a yeah. So the stock seems to be again uh, looking like an inverted head and shoulder pattern. Uh, so yeah. So once the stock has witnessed a breakout and so we see a good momentum in the stock. So head and shoulder is a much bigger target to talk about. It takes time for pattern to form. It is not a pattern which forms in a 1 or 2 day, but it takes a medium term 3 to 6 months for patterns to form. So head and shoulder is one one can look out for. Apart from that, you can also look for triangle pattern. Like whenever a stock has a breakout from the triangle, yeah. So whenever such stocks witness a triangle breakout, so these are the patterns I think so I which one can again look for daily time frame. Apart from that, I would like to add that there are also Japanese candlesticks one can look out for bullish as well as for the bearish perspective. From bullish perspective, again I think one can look for something like a hammer-like pattern, which generally works in candlesticks pattern. So hammer, bullish engulfing pattern, piercing pattern, morning star again are the patterns on the candlesticks which are the part of the bullish candlesticks pattern. For bearish candlestick patterns, again one can look for inverted hammer, something like bearish engulfing candle, dark cloud cover, this is evening star, and other ones one can look out from the candlesticks pattern. Apart from that, again I would like to add is something that the doji kind of pattern, which you must have heard the name doji pattern. Now, doji is something I think so a trend reversal pattern. Once the stock starts, once the markets, for example, current, if you took once, for example, current your stocks is falling on a daily basis, and once it forms a doji like candle, I think so. That again is a time to see the reversal pattern. It is considered as a reversal pattern, but to take a judgment how the doji work, one should look once it forms a doji pattern after a long corrective phase, it should see a follow up on the next day. When I say a follow up, it is something to be considered as the price movement should be crossing the doji high candle. Doji, the day on which the high has been made for the doji, that high need to be taken out. A follow up is required for a doji to get it sustain or to get into positive trend. So doji is again a important pattern one can look out for. Last but not the least, I would like to say some golden rules for trading. Let us understand one thing: be with the trend. Trend is your friend. It is clearly seen. I think the once to understand the trend, whether the trend is positive or negative, one can look for daily as well as a weekly time frame where the stock is forming higher top, higher bottom formation. I think so that is most important for any trader to look out for the trending one. So if a stock is forming higher top, higher bottom formation, it is a known to be said as the stock trend is on the positive side. Same or vice versa is lower top, lower bottom formation, which is considered as a negative trend. So trend is your friend. Play with the trend and always follow the trend. I think so. With a strict stop loss, I think so. Stop loss is, I think so, the one most important for traders who are looking for trading a short-term opportunity. Because without stop loss, maybe one can lose heavily in such a volatile market. So stop loss is the one should look out for. Apart from that, one can ride on profits and cut losses. When I say ride the profit, you can trail your stop losses once the stock is with the uptrend. At the same time, if the things are not working in our favor and we are on the loss side, it is better to square off the trader rather than having a hope of that one day the stock price will come. So don't get too much carry away or love the stock if the stock is not behaving in line with our expectation. Don't be too greedy, even though if one is on the right side of the trend, one should ride the trend. One should not be too greedy and book profit at the predicted level one had thought of. Always be flexible. When I say flexible, the market, as we all know, is a volatile. Don't think of only bullish and bearish in the market. It means that if one is following a certain trend or a pattern, if there is a change in the trend, and if one is convinced it is, he should immediately reverse his position rather than waiting for things to happen. In fact, one should be too fast. He should change and trade in the direction of the trend. Don't be too compulsive. I think so. I think so. Play when there is an opportunity. Don't And last but not the least is make use of all the trading tools which we have discussed today. These are the basic technicals which we have discussed today. And I hope this will help you a lot in your day-to-day time frame. Now, again, I would hand over to Smith. Smith will explain how to put a trade. Right? Yeah, over to you, Sumit.
Thank you very much, sir. This was fantastic that you covered plenty of tools available on the trading view. Just a couple of things that I would like to add here is that there is a facility of placing a trade directly from the charts here. So I'll just show you. In here, on the left hand side, you can see that there's a plus button. You can click directly on the plus button. And here, if you want to buy, for example, in here, I have this Reliance Industries. And if I want to buy like 10 quantities of Reliance, I can just go in here, put the cash, and then there's a option for you to select margin plus, and from the cash as well. You can simply click here, and then you can go on to the next, and then over here it will take you to the main cash buy page directly, and from here you can simply place the buy, and your journey will be completed to put the trade on that particular thing. So that was one thing, and just one more thing I wanted to highlight here is just a sec, where how to use the compare button. I think it was not working earlier due to some technical issues. Um, um, so you need to go on to the trading view, and then once you are here in the Nifty, just go on to the compare button. Let me compare this with a bank Nifty. Right. So I'm just trying to compare this with bank Nifty. Um, right. So here on the same chart, you'll be able to compare it with the bank Nifty. Just to give you a perspective, you can compare it. Earlier we used to compare with Asian Paints and Berger Paints, and here whatever stocks you want to compare it with, you'll be able to do that on your desired time frame. If you want to go with the daily charts, you can compare it with the daily charts. Here it is. On top of this, I would like to add one more thing, that here you have the opportunity to select multiple charts in different formats here. So at the moment only one chart is open, but then there is an opportunity for you to open up to 8 charts in the single window. So let me give you an example of 4 charts here. So in the same window, you'll be able to open like 4 different charts. And here, if you can put this in the full screen mode, you can see the 4 different charts here. So that's how you can, some expert traders, they like to compare, have a different screens. They would like to monitor how the Nifty is behaving, and alongside they want to compare how the Reliance is behaving, and then the bank side, let's say ICICI Bank, and then something else. So you'll be able to do this with the help of this trading view charts, all on the same screen, and the maximum you can have is like up to eight charts in here. So these were the things I think we have covered majority of the stuff. There are plenty of as we mentioned, there are plenty of other tools which you are free to explore. We have just come up with this fantastic tool. Earlier we used to have a chart IQ in here, but you can go and explore all the stuff that you want. and you can even place orders directly from the charts. So I think we have covered most of the points and um, questions. Yeah. So now I think we are open to the questions, and I believe there will be questions from the audience, so we can take that one by one. Yes. So yeah. So the question here is, can we save layout? We are actually working on the saving feature that will be soon available on the as of now we are working on that. Basically, our team is working on that, and soon you'll be able to save the layouts as required. And yes, the other one is, how can one go? How can one go to trading view from our website? So 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 if let me just start from the beginning. So once you are logged in onto your website page, click on the FNO all stocks. You can click on the watch list, and then once you are into the watch list, all you can see is the charts here, and the watch list here, which is already pre-filled for you. And then on the top right corner, you have this charts IQ available as a default. You can click here to switch it to trading view, and directly you are there onto the charts. So I think that answers the question. Um,
one more is, I think, for beginners, which is the easy to understand chart to do their technical study. Yeah, for beginners, I would say, I think so one can look for candlesticks patterns. I think so the one which is very easy to understand, which one can also go through the book, I think so, written by Steve Nielsen on Japanese candlesticks. So Japanese candlesticks, I think so the one can look out for from the starting of the basic part.
I think any more questions from the audience? There. But I think majority of the points we have already covered here. And this video will be available to you onto the YouTube link that you have been provided. So after maybe as soon as this webinar is over, immediately after that, in 5 minutes, you will be able to go through the link. And if you want to go through right from the beginning, you'll be able to get the insights of what Dharmesh Sir has given us, which is for each and every tool which can be used as a whether it is an intraday or for for the long term perspective. So there are plenty of tools and indicators are available. You can explore it, you can study it, and make your own decisions based on for your trading style, basically. So
yeah. So one more question is something.
So there is one more question out there. Can we use two indicators and trend line at the same time? Yes, you can do that. Yeah. So let me just show you. So let's say, for example, I have a Bollinger Band. I have a Bollinger Band, and I have a volume here as well. At the same time, I can put RSI here as well at the same time. So you will be able to use both Bollinger Bands along with RSI. So it will give you a double perspective of how to use Bollinger Bands, because on top of the Bollinger Band top band, when it touches, it gives you an indication of that the market you should be shorting it. At the same time, you can see the same pattern here building up on the RSI indicator as well. As Dharmesh explained very well, that 70 is considered to be the overbought condition where you can rely on it to short your stocks. So yeah, definitely you can put multiple indicators on the same chart. You can put as many as you want. So another question is, marking on chart disappear once you exit. You notice that the markings are not available when you go to the same chart again. Yeah, the save option is something that we are coming up with, and soon you will be made available that save options available onto this chart. So once you have that, you'll be able to log in again, and you'll be able to see the same, the indicators and patterns that you have built on your particular chart soon. So, yeah, so you will get that save feature available soon. How does the long position tool in the chart works? Please guide.
So for long positions, again, I would say you can look for all
Think
these
long
indicators
position.
like trend line. I think so. The one which is important to understand, still the stock is above the trend line or not reaching those trend line, one can continue the long position. Apart from trend line, again, I would say that look for the patterns. I think so. The one can look out for. Apart from that, again, I would say tools like RSI, MACD, the stock trading about 20-day moving average or 50-day moving average, depending upon the time frame horizon. Still, that stock is above those moving averages. I think so. One can continue the long position. And last but not the least is the Dow theory, where the stock still forming a higher top, higher bottom formation. It is considered to be a trend on the positive side. Is there any way to filter stocks based on certain patterns like head and shoulder?
Um, mm, Not really at the moment. You have to identify the patterns like head and shoulder from your naked eye, and you can just try to draw it using the head and shoulders based on that, and then you have to identify whether that is working according to the textbook definition, whether that is working or not. In charts available for NRI accounts, think so. Charts will be available for NRI because these, but I'll have to confirm that. But charts are something that is available for everybody. So yeah, I don't think so. That should be an issue. How to read breakouts?
Yeah, so breakout is something if a stock is particular, for example, trading in the consolidation. Take an example that the stock is trading in the range of 100 to 120. And finally, if we see a break, stock start trading above 120 to 123. So you first need to understand whether the stock is into consolidation is required. Apart from consolidation, if it's getting a breakout, if the range is getting out, the stock trading above this range with strong volumes, I think so. As I said, that the volume is the most important parameter one should be looking out for. So apart from that, again, the volume parameter with strong volumes, I think triangle breakouts. There are many types of breakouts like head and shoulder breakout, triangle breakout, flag breakout, many types of breakout. But yeah, what understand important thing is the volume parameter. If a stock is giving a breakout about those consolidation trading range with strong volumes, and a follow up to that breakout is very much required, because sometimes it happens there have been a false breakout and where people get trapped. So that is why I say two things important. One is the volume, and second is the follow up to the breakout. Yeah.
So what about Heiken Ashi? Just last one. Heiken Ashi, we already have this available in Heiken Ashi as a chart, which is available. So yes, you can just go there and you can click on the Heiken Ashi and you'll be able to see this Heiken Ashi pattern. Yeah, so there was that one. Yeah. So I think so. We have covered most of the points included into the trading view charts, and you will have the link for this available, the video recording onto the YouTube. So yeah, I think that's it. I think the vision for the day.
Yeah.
Thank you very much. Thank you very much for everybody for participating in this exclusive webinar with ICICI Direct on Trading View.
Thank
Thank you
you
very much.
all once again. Yeah.